Greetings, everybody. This is Jeff Scott. Welcome to this week's edition of my top-down review. I misread the calendar. I thought that, I don't know what I was thinking, but 4th of July weekend is next weekend, so I thought I would do my video this week and not do one next weekend. I titled today, Will Strong Seasonality Pause the Decline? I think we're in the midst of a beginning of what could be a significant correction. I've positioned myself that way, sort of, as I'll show you. But I lightened up some of the protection because, as you'll see, there's some really strong seasonality over the next several weeks. As always, this is for educational purposes only. I'm a doctor, not a broker. I am independent. I've paid for all the tools I use. And trading involves risk, and you alone are solely responsible for any investment decisions you make. I always talk about my style of education when I teach people, and it's to be your own guru. Find smart people, learn from them, read, and become your own guru, not me, not necessarily John Person or Ian. Become your own by putting together the different things that make sense to you and make them better. I own a lot of different programs. I need TradeStation, Thinkorswim. For analytics, I use HGSI, EdgeRater, the Q tools, and some of Dr. K tools. And within TradeStation or Thinkorswim, I need my John Person indicator set, my Dr. K indicator set, and my Q set. Here's the website for HGSI. As always, I'm independent, have nothing to do with it except they're my friends. You get free 30-day trial. You can download, you can get access for free to the entire program. Under investing strategies, there'll be hundreds of movies by myself, Ron Brown, and others. So where are we? Last week, I thought we might be getting to roll over. I feel that way this again as we go into this week, and yet I recognize with the seasonality we could see a head fake, maybe a bull trap, and then roll over. But we'll see what we get. Because I think we're in this area, I bought puts, sold some calls. I'm short. I have contras. About the only thing, I've got everything there, including bear call spreads. So I've got every one of these positions on. I still have some long positions, and my goal here was not to get rich because the market's going to roll over. It was to, as I said last week, try and bring my beta on my portfolio to such a low point that even if the market rolls over, I don't suffer. And that's because I'll have things going up while other things are going down. Talk about sea of red. I can't show you any strength here. I mean, look at financials. Everything was red. This had to do with the stress tests, I believe. You look at energy. Everything was red. There's probably a relationship between the two where if these energy companies default, some of these small regional banks are probably at risk. If I look at the major markets plus, let's take a look at Thinkorswim very quickly. Let's blow this up. And is this different than it's been? Remember, here I'm going to look at my futures. When I get into HGSI, I'll be looking at the cash markets. Come on. Maximize sell. Excellent. So E-mini futures, daily chart, and you could see all-time high was set right before the decline. The bottom down here, we've had a big run, and what worries me, at least on the futures market, the bad news is we pierced through that 200-day moving average. That has been support for some time. So that's something that, I won't say support for some time, but it should have been support. Here's the 50 right underneath, so we still have something here. If we break below this 50-day moving average, I wouldn't be shocked to see us come back down here to the 2750 level, which would be another 8+% down. So is this bearish? Certainly as neutral to bearish, not as exciting as it was a week or two ago. How about the NASDAQ? Well, the NASDAQ also broke down here. It broke below the 17. But the difference here is you had a golden cross with the 50 above the 200. They're in the right distribution of places. So we'll see whether this PPS sell signal and a break of the 17, do we come down to 50 and bounce, or do we go up before then? Much healthier market on the NASDAQ. How about the Dow? Make this look like the others. The Dow has broken deep below the 200, traded down to this 50. The 50 stopped multiple times here after it broke above it. So what had been resistance became support. We'll see if the support holds here. I think this is a dangerous place to be. If I look at the Russell futures, similar to the Dow, in between the major moving averages and sitting right above the 50. The VIX, as you might expect, popped up a little bit this week, especially on end of the week, as the weakness in the major indices. And then the dollar certainly is also firmed as the markets have suffered. Now, I'm not sure this is a big difference here, but when the dollar starts to go up, that's worse for many of the stocks that I trade. And certainly if you're into metals, gold, etc., it can be significantly worse for them. The weekly charts, I won't spend much time on, but you can see just the deep cut on the E-minis, which we made up much of, but not all of it. And frankly, we're sitting at about the 50% retracement of the prior fallback. NASDAQ certainly looks stronger, right at its all-time highs before it pulled back starting Monday afternoon. I bought at the money puts on in Monday after the run-up on Facebook and my Apple and my Microsoft, my CrowdStrike, my Datadog, and then a couple of other things that I was fat with profits because I was concerned that we were going to see a short-term top that may turn out to have been prophetic, especially with the pullback. I'm sitting on Facebook puts at 240, 250 right now. Rates are steady at low bases. So this week they moved just a little bit, maybe dropped a teeny bit, but really haven't changed much over the last couple of weeks. The AD lines on the small and the big stocks and on the NYSE pulled back. You can see the various ETFs and how they all pull back with the AD line. And the only thing doing different things is the TLT, bonds tied to interest rates. With those rates drifting down just a tad, it was enough to boost the bonds. Now the breadth, both the stocks in the 200-day and certainly the stocks above the 40-day moving averages dropped considerably. But as you'll see here on the 2121, the 12-week or 3-month new high, new low, we came down from overbought down to the lower third of the pack. But we're nowhere close to oversold. So we could go for a few more days before we bounce. McClellan's, we look for three things: extremes, divergence, and rejects. Well, we're working our way down towards an extreme, but we have a lot of way to go on the oscillator before we get to that. And on the weekly, it's a similar thing. No big signals there, except we are distributing, we are becoming less breadth, and the market, the indices are falling. Continuing along, just to show you when I talk about the high-low jump and looking for stocks at the extremes, Snap is one that I have on my look at on Monday for consideration of a short. Why? Because Snap is trading at the top of its high jump, which means it's as stretched as it's been in the last year. And not only did it curl down this week, meaning become less stretched, I had a red candle high at the high jump occur on Friday. And that's been a very valid signal for me, and looking especially at green candle lows, the opposite, which would have been right down here where you're traded below the low jump, and then you had a reversal candle. So that's a signal I look at, and the point here is we've got a lot more red candle highs at the high jump than we have a green candle lows at the low jump. Current buckets, this is what bull looks like. 6/8/2020, 95% of the stocks in the S&P 1500 are trading above their Bollinger Bands. 45% are outside the Bollinger Band, 95% above the midline. If you look at what we ended up on Friday, 88% of the stocks are below the midline, yet we have very few stocks extremely oversold. Again, this could go on a little while longer before it has to bounce. We won't expect a Hindenburg omen. I guess the point here is there's not a lot of new highs or new lows. We'd expect the Hindenburg omen to fire once we start to hit new highs. Market tone, this column here are the kahunas. And when I see a blue kahuna, that's bullish. A red kahuna is bearish. And you could see on Friday and Wednesday, we had a series of red bearish kahunas. That's 3 bearish kahunas in a low. And that's finally enough to kick us out of a bullish mode. And now we've got a number of red indexes and the rest are yellow. So clearly weakening in the market. Now, the best tool I've ever seen and ever used for intraday monitoring of sector strength are Cigar's Q Edge tool. This is amazing. Now, you have to have a real-time feed from Refinitiv, which is Metastock, but it's amazing. So all day, I'm able to see 1-day, 2-day, and 5-day performance. This is percentages of the various sectors, so you can see which sectors are leading and when. I can see here in the AD line that all the sectors finished negative on Friday. If I look at industry groups, we have 7% of the industry groups were positive. That's very bearish. And if we look at overall the stock market, only 14% of the stocks were bullish. We can see the relative reduction, comparative, as well as the absolute percentages down. And we can see in maroon the 5-day, the blue, the 2-day, and purple was the 1-day performance. And you could see there's only one of the 11 groups and 3 different readings, only one of them is positive, which was a slight win for industrials on Thursday, between Thursday and Friday. So I guess that's the strongest sector going into the weekend. And you could see here over 5 days, we were all negative. Over 10 days, we had 1 positive group. And over the month, we've only had 2 positive groups. So we are decidedly weak despite all the hype in the market about how well it's gone. That might be because the strength has been getting narrower and narrower. Now, during the day, I can then go to this page and get a sense of which industry groups are leading. Now, 1 day, meaning Friday, when the market opens on Monday, we'll start to have this real-time column starting to fill. When the market closes on Monday, then Monday becomes 1 day, and this will wait for Tuesday. So interestingly, utilities led over the 5 days and led over the 1 day, and utilities have been in the dog pile and the poop pile for the last year. Look how weak they were, and they've come alive. Something else that's been weak and come alive are industrials. Energy and financials are leading the pack to the downside, and then communication services probably impacted a lot by Facebook. Now I can look at relative strength. 11 is better than 10 and 9, or I can look at actual performance. So even though utilities were the best group on a bad tape, they were still down 1%, 1.22 for industrials, and so on and so forth. I'm more interested in industrials than I am in utilities. So let's say that I highlighted the industrials and I clicked on the gears. What I'll open up then is the list of industry groups that are within the industrial groups. And you can see the same type of readings here where the higher the number, the lighter the blue, the better the story. So let's highlight all of those that are 129 and higher. And let's click the peers. And now what I would get is a list of stocks in those industry groups within that sector. And then I can click on some of his shortcut buttons and get a list of the fundamentally strongest stocks and then start to do my diligence from there. Now, you might say, well, Jeff, don't you use HGSI? Of course I use HGSI. HGSI is $600-$700 a year. A real-time subscription to Refinitiv and the Q tools is over probably $1,500 a year. It's much cheaper on the end-of-day program, but then none of this works during the market. HGSI will not do this so exquisitely real time. When the market closes, I get most of my work done in HGSI. And yes, I can update HGSI during the day as well. I think these work very well hand in hand. And unfortunately, Cigar doesn't believe that the appropriate data feed is available. Plus, HGSI needs to be real time to do what this does. And right now, it's more of a real-time update, but not a real-time platform. Canaries in the coal mine. It's funny, this line was sitting there, and I don't know why this line was there. Maybe it was a target. And I think maybe I did I don't know why it was there. I'm not even going to guess. Turned out to be, it was the target. And that's what we ran up and hit on Wednesday. On Tuesday, on Monday, that would have been on Tuesday. And then person signal came in on Wednesday, and you got 2 deep bars on Wednesday and Friday. We had a mobile breakdown from a squeeze, a new person sell signal, a kahuna to the downside, a pocket pivot to the downside. And you may notice this red bar here. That is a phoenix. That is it's a market signal calculated on the NYSE that is telling us that we are high risk, that this market is going to correct. Maybe not in the next 3 days, but it's coming. Now, once again, just like last week, growth outperformed, but the difference is on the left-hand side, where high ERG had the least down compared to low ERG, and better relative strength had lesser down than poor relative strength. Being a good group was good. Having accumulation was good, but what good meant was you lost less. Know your news and earnings. The third is the holiday for 4th of July. I also made it a Zoom video day, since most of us, or many of us, are still stuck at home. More to follow on that. Do I expect much on this day? You got non-farm payrolls and unemployment coming out on Thursday. That's a big freaking day. All right. A big day. Initial jobless claims. This is continuing claims. This is Thursday and Friday news rolled together. So this goes and gets a red star as being a very important week for news. And oh, by the way, I don't think we'll see any dissension in the FOMC minutes, but we've got those on Wednesday, some PMI and others. Earnings, we still got earnings this week. As you look at what's there, there's some big guys. Micron, FedEx, Constellation Brands, General Mills, among others. So there's a lot of earnings to come this week, and big news day on Thursday. Notice that Jefferies Financial Group will actually report earnings on a non-trading day. I mentioned seasonality. There's many programs to do seasonality, too numerous to count. I have them all. Believe me, I know how many there are. EdgeRater is not, you're not paying for a $5,000 seasonality program with EdgeRater. You're buying a program that's considerably less money and getting a $5,000 seasonality program thrown in. I take a list, which I call my trading universe, which, despite the fact it's a lot of ETFs, it's mostly stocks, $2.50 and 250,000 shares. I do allow ETFs in that list. And I go, what is the performance over the next 2 weeks, 1 month, 2 months, 3 months, 4 months, and so on and so forth. And that list of 5,000 stocks, I only care about the big ones that move. So I only look at stocks to the upside that have 8 positive years and no more than 3 negative years. Figure the worst case, I'll have 8 out of 11 positive years, which is 75, 80%. I then take those stocks and rank them by 1 month average return, and then I come up with a score. And all I did for the score is I take the return times the percentage of wins, and if I get a green mark there, it means I should look at it further. So I want to point out what you're seeing here. Forget Iovance. It's already had a big run. It still may run more. The SVXY, that goes up when the market goes up. 8 out of 8 years, average gain 16% over the next month. Technology bulls, up 11 out of 11 years, average gain 15%. Ultra Pro Q Pro shares, 10 out of 10 years, 14%. Here's Baidu, it's up 13 out of 14 years, average return of 13%. FAZ, which has made me a fortune. This is the opposite, FAS. FAS up 11 out of 11 years over the last month with an average return of 11%. S&P 500 Pro shares, 3 times S&P, real estate, emerging markets, semiconductors. Is this a picture that you expect in a bearish time of the year? Absolutely not. And then look at the big ones that are bearish. The contra ETFs, so the things that save my bacon this week. My VXX, my SQQs, my FAZ, my SDOW, shorting triple Q, TQQQ, shorting the spiders, buying TZA. Well, those would all be in the negative category over the next month. So, a question again, will strong holiday seasonality save the bulls for another week or another month? Now, if you look at the last week and you look at the biggest change to the upside, looking at relative strength changes in the same trading universe, what do you see at the top? TVIX, LABD, FAZ, UVXY, financials, small stocks, Brazil. So last week you made money by buying contra ETFs. What will happen this week? It was certainly a bearish week. When I take all the different groups that I look at, and by the way, there were 0 stocks in these 5. Well, 0 that Qs I didn't fill out. There's only 3 bullish groups, and 2 of the groups either were negative in gainers versus loser or barely positive. And you look at the average returns of the winners, 4.2% in the 3 stocks of the prior week that were a Bible gap up. This is from end of day Friday to end of day Friday. 1.59 for the blue dots in MarketSmith. Over here, I've highlighted MarketSmith was down 1.57. My buy watch was down 1.64. My stocks were down 2.2. Remember, I hedge. I'll show you what my stocks were really down in a second. IBD 50 was down 2.67. Excuse me. The weekend review. The 50 is down 2.74. S&P 500 was down 3.49. And the Canaries were down 3.68. If you made a lot of money this week, you were either shorting it in cash or are a really good picker. So last week I told you that I tried to get my beta as close to 0 as I could. What I wanted to do is to get neutral. And I wanted to be neutral because I didn't know what was going to happen Monday morning, and I wasn't ready to start unloading my long positions because I knew about seasonality. When the thing spiked up in the beginning on Monday, as I said, I bought puts on a lot of different things. If they went up further, I'd say, well, I bought some insurance that I didn't use and I made a lot of money. And if they started dropping, I'd say, thank goodness I bought puts. Right now, we're in the latter category. Unfortunately, I got a bit fanged at the weekend as Facebook, even though I've got puts on it, I still have the regular position. So it came down and ate up a lot of my gains on the puts. Amazon, I've got puts on it, but I don't buy them at the money. They're too expensive. So it dropped a lot on Friday. Netflix, I didn't have any coverage on. Apple, I did have puts. That one limped into the close. The interesting thing is last week I showed you I was up 887 and 77, whatever, $1,000 on the year, 62.5% in my lifestyle trading account. And we ended up the week up 872,000, the exact same number. If you add back these 3, it's 875. It's not fair to count them because I got puts against both of them. And if you look at the percentage with a 1.4 million starting the year, 62.5%. So I had no change on the week. Saved my bacon. We'll see what happens this week. I had an email from somebody asking me about the boxes. Well, I know why they asked, because every week I show you the S&P's up 34.5% from the bottom. Any stock that was in a box was up 40%. Excuse me, if you had no box, you were up 40%. Higher, no box. But any stock with a box has outperformed no box stocks in the S&P 500. Led by this group here, 4 out of 5 winners, box 8 up 85%, 80% on box 4, 11 and 0, 80% on box 6, 15 to 1, and so on and so forth. The boxes are really cool. What Ian told us is at times of major market bottoms, start to fill out these boxes with stocks. And when you start to see the stocks in these boxes starting to break out, you'll know it's time to get back into the market. Well, things have mutated a few times over the years, And now it's become, in many minds, a buy list. You wait for the market to turn, and then you buy the different box stocks. Now, as you could see, we're looking at two factors: annual earnings over the last 5 years, starting at 50, 25 to 50, then 12 to 25. Current earnings over the last 2 quarters compared to the prior 2 quarters, 100%, 50 to 100, and 25 to 50. We know that if you're growing 100% per year, you're going to double in less than a year. If you're growing 50% per year, you're probably going to double in 2 years, especially with a 25 to 50 annual growth. And my favorites, besides box 1 and 5, is box 7, something that's growing really well now, but stubbed its toes in the last 5 years, so their growth rate was only 12 to 25%. Let me show you in the program of HGSI how easy it is to make boxes. I want to emphasize, and I always had this discussion with George Lee, Jeff, how are your boxes doing? And I would say, George, I don't follow the boxes unless we hit a major low. Well, we hit a major low. When you know the date's 323, you know you hit a major low. So I'm just opening up all securities, 8,000 securities. And I'm going to take a filter that I created, or you all created. Everybody can create their own. And what this filter is going to say, I care about 2 things. I care about relative strength, and I care about that they have a box. So here's ERG 240. Is that the one I want to use? Okay. That gives me 270 stocks. That's too many. So let me go in the filter here and let me duplicate it. And now let me edit the new one. Is that the new one? Nope. Hold on a second. Did I delete it, not duplicate it? I think that's what I did. Oh, I hope I didn't just do that. Yes, I did. So let's make a new filter. Simple filter. We're going to call it, hold on a second. Close. Filter. I want to put it in Jeffrey Scott. All right. Highlight Jeffrey. New filter. We're going to call it Ian Boxes ERG 250. If ERG, just type ERG in there. So the most it can be is 297, 099 times 3, and we want it to be a greater than or equal to 250. If I look down here, preview, it tells me I have 260 stocks. And let's type into search boxes, HGS boxes equals I'm trying to guess I just could put greater than or equal to 1. Now I look at, I've got 122. All right, so I required ERG of 250, and you have to have a boxes. Now I'm going to hit OK. So I've got 122 stocks. Again, this is not a major bottom. If we pull back a lot and reverse, then it might make sense to think about it then. Here's the slicer, the spectrum analysis. I'm going to hit that. Forget what that says. I want to go here where it says load custom slices. And I'm just going to type HGS. Actually, it says box stocks. Okay. Now I'm going to hit open. And it automatically sliced up my boxes. Now, I want to take that away for a second. Okay, so this is not boxes. And I'm going to come in here, drop it down, edit custom slide options, put box. Nope. Let me try that again. Type HGS, and you have HGS box stocks, shows up there. You could also have found it right here. You can hit open. It forms the boxes. You could see here at this given moment, you see the stocks that are in the various boxes. Now here's the piece de resistance. Make groups from slices. So we're going to call this group JAS test boxes 6.28, not a bottom. And hit OK. Now I'm going to come back here and see if I have something new to show you. JAS test boxes 628, not a bottom. And then each of the boxes are listed here. The parameters, box 1, box 10, box 2, and the stocks that are here. And then all you got to do is go in and do a GPA, and you can have the same reports I showed you. All right. For those that wonder, the proof that it works, you'll have to come to a live education program. That's not what I'm doing here. Speaking of live education, I'm going to do a Zoom meeting on Friday, July 3rd. The market is closed. I'm off work. I think it's a national holiday. I've got nothing to sell you. I'm going to do it live because it offers us a chance for discussion. I want to show you how I use the tools and my approach to trading. Here is the link if you didn't get a letter from me. https://tinyurl.com, and then the key is HGSI DOC July 3rd, 2020. Questions, request in advance to hgsidoc@gmail.com. As long as a video comes out okay, I will post it. So we sold off hard on Friday as Facebook dropped, as large advertisers bailed. They've continued to bail over the weekend. This pulled the FANG complex down with it. The NASDAQ outperformed on the week as all major indices fell greater than 2%, and all 11 S&P sectors were negative. The NASDAQ is still holding on to a gain. The rest of the indexes are down on year to date. Remember, I'm up 62.5%. Sometimes you just get lucky. Many of major indexes are failing at the 200-day. We'll look at that. Many stocks doing the same. The next week and month are seasonally strong. After a week's session, it might not be surprising to see a bounce into the holiday. But as we enter the doldrums of summer, I'm certainly expecting further weakness. I trimmed some of my short position by selling half of my contra ETF options. I continue to have what are now deep in the money. And by the way, when I buy a put at the money and then it becomes deep in the money, that's not a good thing. It means my underlying has dropped. So I'm just buffeting my drop. But I've got deep in the money puts on Apple, Facebook, Microsoft, CrowdStrike, Datadog. Some have been my biggest leaders over the last couple of months. I've got net shorts on some of the reopening play, the ETF jets on airplanes, Royal Caribbean and Wind. Both of the latter I was long, and I watched Wind, and one day it hit 105, and I said, this is nuts. And I bought puts at 105. It's now in the low 70s. I'm prepared to cover my shorts if the market shows strength, but entering the weekend fairly well balanced between my long and short positions. All right. I know we've used up a lot of time. I apologize for that. This is a interesting market. Now, usually here I'll bring you into TradeStation, and I'll go into my market force and here, and I will look at, and we're just going to start with the E-minis. I look at 6 things. Number 1, is it in a person buy or sell? Well, I've got 3 time frames: daily, weekly, monthly, and we are short-term weak. Intermediate term, we're still in a buy, but maybe slowing down. And on a longer time frame, we are in a sell. So the E-mini is weak. I look at where are we within the envelope, no signal, we're right in the middle. I look at what color the bar is. The bars are the Alexander Elder Impulse Indicator. You have to buy it at elder.com. Red means I should hold or short. Green means I should be long or hold, and blue means I can do whatever I want. They're red, blue, and green. So short term, definitely weak. I look for the dots on the top or green dots on the bottom, which represent MACD divergence. Notice we had increasing MACD divergence into June, and then the market sold off. I look at the weekly bongo, which surprisingly is still holding up green, and the high jump is at 70. When the market topped here, the high jump went up to 100%. When that high jump is above 95, 96, I know that that market or that stock is going to correct, and I take measures to protect my nest egg. The NASDAQ, the big difference here is it went into a daily sell on Friday, and it's still up, let's see, at 80 on its high jump. But you can go back here, it was 100, and then the next day it rolled over. It's just clockwork. I love the high jump, one of the things that I learned for Ian. I don't want to go and look at the others because they're going to be similarly depressing. The VIX differently has a buy signal daily, weekly, and monthly. Its high jump is low at 20. It's got a green candlestick. Its weekly bongo's red. I think the VIX is at risk of going higher here. And what's been super duper strong, certainly the last couple of days, has been the USD dollar. A buy signal came in on Thursday. It's in a sell weekly and a buy monthly, still with a red weekly bongo. So it'll be interesting to see what happens here. So I haven't showed you a bullish, get excited, all-in market, have I? I hope that's not what you're seeing. Next thing I like to do is go into HGSI, and let's go into Major Markets Plus, our Markets Analysis Group, Major Markets Plus. Hit my warehouse, it'll pop up the things in that group. Let me make this, trim it down here. So I want to look at top-down view, which is price and volume. Not all the indexes have the other stuff. And let's make sure we've ranked it by raw combo. So TLT bonds and gold and silver were the strength in the VIX and the dollar. Do you think your portfolios are happy when you see that on top? Heck no. If you look on the bottom, small caps, the Dow, the Russell, the mid caps, and NYSE, the NASDAQ, and then the S&P 500 in the middle. This was a very difficult week for the longs. I'm actually thrilled that I was flat on the week because my portfolio manipulation, which I talked about last week, actually was spot on. I got to my beta after I bought the puts. That was pretty much a neutral portfolio. And because of that, I didn't lose any money last week. When I was a younger trader, and maybe it'll happen again this coming week, I used to be late to protect, and I would lose my shirt for a couple of weeks before I sorted things out. All right, we're about 38 and a half minutes in. Here's the S&P 500. It has pulled back into its 200-day moving average. It is still between the 61.8 and the 76% retracement. This would be a natural place to bounce. It bounced here before. You have the 50 underneath, which is good to know. But what's different this time is we got a fresh new Eureka. So I think this market is at risk. It can go either way. I don't want to paint this to be overly bearish. But if I was a betting person, this market probably is going lower. I do look at the strong seasonality, and I have to take that into account in my portfolio. How do you get depressed when you see this? This has just been an amazing run, but we certainly broke down below. Look, if I was somebody who liked to draw, which I'm not, maybe I should draw more often. I could finally figure out what I'm doing. I mean, there's a trend line there, I suspect, and we're right at it. I think this one has not rolled over totally. It could certainly go higher. But with the Eureka, the Kahuna to the downside, the pocket pivot to the downside, the John Person sell signal, and the Mobo breakdown, you have to be a little bit concerned here and want to protect some of these great gains we've had over the last couple of months. If I look at the Dow Jones Industrial Average, those 30 stocks we worry so much about, has pulled right into the 62% retracement and to the 50-day moving average. A natural place where one would expect us, plus you're right above a gap fill area. We pull back here and we bounce. Again, perfect place to bounce, but right now the momentum is down. And if I look at the Russell 2000, here's your failure. I should put out on the others at the 200-day moving average. Clearly the target's the 50-day moving average. Will it hold or will it bounce? If we look at from the IBD world, IBD 50 fund had a new sell signal come in this week. So this is an actively managed IBD 50 ETF, and it's been doing very well of late. There's also a momentum breakout here, which has started to go sideways. So that probably reflects what a lot of your portfolios are doing, as most of the people that watch these videos come from the IBD world as well and have growth stock portfolios. The dollar, I mentioned it's been getting stronger. It's up a little bit. You can see how the person market catcher, if you want to see bullish convergence, as John likes to refer to it, you got a higher PMC and you got a lower prices. So you got some bullish convergence here. And, do we run up to the 200 and test that? That would be my guess. If I look at the volatility, which I showed you previously on Thinkorswim, a little bit of life on Friday in the VIX. Remember the Phoenix, which is bearish, and the Eureka, which is bullish, are calculated on either NYSE or the NASDAQ, so they don't change based upon my symbol. And notice we had a hammer here for the week on the VIX, a reversal signal as well. Gold, which was strong as the market was weak on Friday, really looks to me like it's at a place it could break out from. It's going sideways, or was going sideways. Perhaps had a little flag here and broke out on Friday, something to watch. Silver was strong last week. It sort of went sideways. And then gold miners, which have lagged at times, need to get above its chandelier stop. So do I see a rip-roaring bull market here? No, I see a market that's either pausing to refresh and going to go higher behind strong seasonals, but it could still be a market that's about to roll over. Show you a little bit of how weak this market is. I have 175 industry groups. If I look at how many industry groups have momentum up, it is 12. If I look at how many groups have short-term momentum down, it is 54. So that shows short-term weakness. If I look at 5-day down, that's not the one. Try the next one. I've got 89. In 5-day up, I only have 14. So decidedly this market is weak, both on a 2-day and a 5-day window. So typically I like to go up to the top groups, make sure I'm on the 2-day force, look where the momentum is, and see if there's any interesting stocks. And I normally only look at the top 10 groups and the stocks above the major index. So if I right-click on commercial vehicles, Workhorse Group signed a big contract this week. This thing has run from 2.8 to 10. It'd be a great stock to be holding and owning. I'm not sure I'd be buying it here. And that's the only one above the index, so it's the only one we're going to look at. Healthcare supply channel. Try this again. Just got 3 here. This was on my buy list last week. This is Echo Bionics. Look at the weekly chart. It reminds me a lot of Tandem. Look at the PMC, positive divergence there. Bible gap ups a couple days in a row. I don't think I would give this much more room below maybe the low of the day on Friday. It closed just above that. But this is the kind of player in this market that could go somewhere. But it's not without risk. And if you put your stop, let's see, wearable robot exoskeletons. If you put your stop down here at the 200, you are 30% away from the price. That's just a long stop. That's my only issue with this week. Patterson does dental supplies, looks to be breaking out here. Everything's green up here. Had a kahuna 2 days ago. Further breakout today. I have no problem with Patterson Company, PDCO. Mass merchants, interestingly, Big Lots had just blowout earnings. And these have a tendency to keep on running. A Bible gap up, a mobile breakout from a squeeze, and a kahuna, and a new John Person buy signal. I would set my stop no lower than the bottom of the Bible gap up bar. Maybe you just follow this chandelier stop, but again, you're risking a fair amount because it had such a big move on Friday. That's the only one above the index. Precision Metals and Mining, no shocker. We looked at the gold and silver. Newmont Mining, pullback, looks like it's setting to go if it can break above a chandelier stop, which is that red line. Kinross Gold, similar story, looks even better. Barrick's been the one I've been playing, sitting right down on the 50. All these look like they're getting ready to roll. We'll look at a silver play, First Majestic, similar story. So these look interesting, and you probably want to have some precious metals. Computer hardware, don't know much about this group. I have a lot of computers, but Mercury Systems, you know, you look at it for a year here, and it's a sideways market. It did have a nice move on Friday, breaking above the 200. To me, I look at the weekly and I pass. NetApp, too far down in its pattern. Dell is interesting. They're going to do something with VMware. It got the stock to gap up. Proving the ever old adage, you buy on the rumor and sell on the news, because after the news came out, the stock ran up and pulled back. Probably going to be a good place to be buying here. But Dell is interesting. HP, too far down. Pure Storage looks interesting. I just don't like the fundamentals. I made money on this once in the past, and I've lost money once. It's sitting down in the 200. I don't have any issue with this. It's got a new person buy signal, a kahuna. It's kind of a sideways, and I look at the weekly chart, and it's kind of easy what I see here. But you can't see it when I put dark on dark, so let's try it from here. Looks to me like we have a downtrend, and we're just testing resistance. So I certainly would be careful of Pure Storage here. Food and drug stores, Rite Aid, what a turnaround story. New CEO, had an earnings surprise. It's certainly not as good to me of a store as Walgreens or CVS, but it might be a better stock with some momentum. It's had its move. I'm not sure it's going to move again for any time soon. But look at this sort of a belt hold move on Friday and a new weekly buy signal as well. Spartan Nash, I sold it when it pulled back. I should have kept it. Pulled back to the 50 and broke out. This is a grocery store with great earnings. Oops. Sprouts Farmer Market looks interesting here. Pull back to the 50. Looks like it's ready to go again. I'd wait for it to take out my chandelier stop. Chef is too far down. Village Supermarket. No volume. I'm not going to even look at a stock with 59,000 shares. And then Walgreens, not right now. Next one is infrastructure software. Fastly has been a market machine leader. If you own it, God bless you. You're so lucky. Hold on to it. If you don't own it, just careful. Where do you put your stop? You can go to shorter time frames. I have no issue with it. It's had a big run already. High risk play. Splunk pulled back and then is running again. I like this pattern. You look at the weekly, you can see it's in a nice uptrend, a sideways move at the 50 and a mobile breakout from a squeeze, a pocket pivot at Kahuna, and we've got sort of a flat market for a while and not so flat person market catcher and a new buy signal. Akamai Technology is on my buy watch list. Okta I bought last week. I'm holding it. It's breaking out. Very volatile. Citrix. Limelight. I love buying stocks here. This is my pattern. Kahuna, new person buy, mobile breakout from a squeeze, but it's already ran. Probably getting too far gone for me to chase. Sporting goods, not my favorite cup of tea, especially when they're gun companies. I'm not going to get political, but let's just say that I don't have a gun. And I'm not going to buy a gun stock or a tobacco stock as a cancer doctor. If I was looking to buy something, it broke out, ran, pulled back, I got nothing wrong with the pattern. Just I'm not buying a gun company. And Vista outward, nice uptrend. I think certainly with the various unrest going throughout the country, that's probably bullish for gun manufacturers. Plus, if people believe that Biden's going to get into the White House, they might be wanting to buy their guns first. Quidel is involved in viral vaccine production. It's had a huge run. It got kind of loose here, pulled back. Man, was that a great buy opportunity. I missed it. It's probably giving you another opportunity up here. It's a high base breakout. It's kind of a cup and a handle and a breakout. I just consider it to be a little higher risk. And then I look at its earnings per share growth, and maybe it's cheap. So Quidel has been a leader. Looks good. Haemonetics, no thank you. Accelerate Diagnostics. Probably is involved in the COVID story. Breaking above the 200-day moving average. Don't know anything about it. Doesn't make any money, as do many of the COVID stocks. Don't know anything about this. Aspra Women's Health. It's a big move off the bottom, 1 to 5 in a short period of time. Can't give you any insight. Cardiff Oncology is a little dinky. I didn't think anywhere close to a clinical product. And they've got some immuno-oncology and other therapies. They broke out this week. This is probably worth looking at. When these companies get a drug approved, they're worth $4 billion. Right now, it trades for less than $100 million. So based upon the fact that they have a real website, they actually have some products in development, and they've got a market cap of $95 million. The upside potential for something like Cardiff is huge. It's also very high risk. But if you told me, Jeff, I want to speculate a little bit, and I'm going to buy 1,000 shares for $5,200 and forget about them, someday you might thank me, but most likely you're going to tell me that it went bankrupt. But it's a cheap biotech stock or healthcare stock with real drugs in the market, in the development. Huge move. I would have rather bought it for $1. Meridian Bioscience is another one that's had a big move. And again, do I really want it's a diagnostic, so think COVID. It's had too big of a run for me to chase. I want to buy them here. I want to buy them here. I want to buy them here. I don't want to buy them after a big run when their high jump is becoming an issue. And then we could look at courier services, and it's really just stamps.com. I love the pattern, okay? They've been changing their model, and the stock got clobbered here when they announced that they were going to, they had issues with their renewal of their contract with the U.S. Postal Service. Then they came out and said they wanted to diversify and look at other carriers besides the Postal Service. And look at what happened. They had a run, good earnings came out, surprise. And now they pull back into the 50. Mobile breakout from a squeeze. A new person buy signal on the 50, a pocket pivot, and a kahuna. I would probably, if the market is not horrible, I may put a buy in on this one on Monday. I like this story and picture a lot. So that's going through the top 10. And I did fairly extensive workup over the weekend. I'm going to look at that in a second. I found a lot more shorts than I found longs. And if I look at some of the shorts, which means the market's going up if I'm talking shorts, by the way. Let me kill this. Now, this is a great superstar, high-performing stock, which I bought here. And as you could see, I've had a very nice run. It had a shooting star on Friday. I have big profits in it, and I either have to buy puts or I'm going to take my profits, because in this market, when I see a shooting star, I get nervous. So it's not really a short, it's a protect your profits. Broadcom, big run up. Failing here at the 17. I'd rather be buying it down here or shorting it down here, but I wanted to put it on a watch list as squeeze, person sell, pocket pivot to the downside. Domino's broke down below its 50. One day I hear about how great it is on the IBD forums, and the next day it's breaking down, which means it could turn around on a dime. But it broke down below the 50. From mobile breakdown from a squeeze, a person sell, and the Phoenix, which is the market, and the kahuna. Cintas, it's got a lot of support here. It looked better on my TradeStation platform. Probably going lower, but it's got too much support immediately underneath. Sherwin-Williams, starting to look a lot like Domino's. If it breaks down below this area here, below the 50 of the 200 and gets down here, I've got a mobile breakdown from a squeeze. I got person sell and a kahuna to the downside. A break below the 200-day moving average, I'm probably going to be shorting that. Market access, I got to wait for it to break below the 50. This is a list, not a list of stocks that I've already traded. FleetCor, credit processing, failed at the 200, failed at the 50. Does it go back and retest its low? Costco, how long do we give this thing to do something? It just broke below its 200-day moving average. Walmart, same story, different store. Here's an energy stock, a defense play, Transdigm, TDG, an expensive stock, failed at the 200. It's likely to bounce off this 400, but this stock got all the way down to 200 in the pullback. I break down below this 50, and I might be all over this one to the short side. CSX broke down below the 50 and the 200. Looks like it's going lower. Adobe, hard for me to short all-time highs and champion stocks. I just put it on a watch list because look at the weekly shooting star. Not a bullish candle. The Dow. I've short the Dow using the S Dow. Failed at the 200, sitting right on the 50. This is sort of a line in the sand. If it breaks down below that, I'm going to add to my shorts. Lam Research, a little early, something to watch in the technology space, an expensive stock. And Dexcom, certainly a leader in the diabetes space, touched the 50-day, and I'm going to watch a violation of that 50-day with a close below it will be something that gets me interested. Global Payments has broken below the 50 and the 200, big run up. Tesla, I would never probably short this up here. It's too speculative. It's highly likely it bounces, but at some point it's going to hit reality. It's way too much money for what you get. But you short Tesla at your own risk. Google, got support here at that 200. Part of this was in the Facebook devastation that we saw this week. I'd wait for it to break below that 200, but a break below that and a serious threat to social media advertising cannot be good for Google in either way. And then I didn't put Facebook in here because it's already jumped or dropped a lot. But Facebook, you can see it pulled right down to the 50. My puts are right here. I top ticked this puppy. But of course, I lost money on the stock and made money on the put. So it's a mixed blessing at best. I did see a number of stocks to the buy side this week as well. Let me open this list so you can take a look at it. Look at what the industry groups are. Cardiff was a healthcare we already looked at. And gold. Would I rather be long or short the VIX? I'd rather be long VIX VXX, and I am long VXX. How about the S&P 500? This is the SDS. What I did, because I get more money for my buck, is I shorted the SPY. So I'm short SPY options. I must have spelled it wrong, SPY. You can see if it breaks below this 50, my options become really nice to have. I'm expecting a bounce. I am short triple Qs. And I look for the higher priced option and I short that thing because I get more bang for my buck. It's pulling back here. I am long S Dow. We'll see what it does. Cheap stock. I'm long FAZ. Higher highs, higher lows. And I am long. I took a flyer on this and I bought 400 out of the money calls. The calls are now 50 cents in the money. That's 400 calls, I think is 40,000 shares worth. But I didn't pay much money. They were cheap out of the money. I then sold something against it on Thursday that was also out of the money and recouped all my costs. So now I'm playing with the bank money with the equivalent of 40,000 shares. I can only move it 1.5 points from here. But 1.5 points on 40,000 shares is $60,000. Look at how much I have to move to make money on SQQQ versus the long instrument triple Q. It's up in the 90s. That's why I shorted this one first. So I have those positions on. Let's see what we got here. Application software. Zoo Inc. Sideways move, mobile breakout from the squeeze, pocket pivot, Kahuna. Supportive on the weekly with a high close doji. That one looked interesting. Channel Advisor, why did I like this one? Because it's sideways moving, looks like it's breaking out. Mobile breakout from a squeeze, multiple kahunas in a row. I like that a lot. Guidewire software, another application software. It probably has a lot of resistance up here, but it did break above its moving averages. And Zendesk, sideways move, it looks like it's breaking out. So there was a number of application software. On the biotech space, Allogene, not ready to buy it here. But if I can get a kahuna or a pocket pivot or a mobile breakout coming in from a squeeze, I like the setup. So it goes on a watch list. BioChrist, there we are, pull back to the 50 and a breakout. I could be buying this if it takes out the high of the day from Friday. Here's a small biotech. It's got some contracts with Big Pharma. It's been in a steady uptrend, little pullback breaking out here. This would be very speculative. Generac, I'm still in this, or back in it. Had a nice run after I picked it back here. I think it's getting ready to go again. We're getting into hurricane season down here in Florida. Looked at those. I mentioned Akamai before, and you could see breaking out from the moving average. Another one that's interesting here is Lumentum Light, L-I-T-E, going sideways here at the 50. It had a bunch of pocket pivots, had a kahuna, big volume, a mobile breakout from a squeeze. At some point, and probably soon, this thing's going to break out from this area. And when it does, if it breaks out here, I'm going to be long. I looked at the gold plays. Last week I showed you Axozone. And I talked about it because it had pulled back, was sitting on the 50. And what happened this week? Last week on Thursday and Friday, it had kahunas. That's what drove my attention to it. It did nothing Monday, Tuesday, Wednesday, Thursday. And then on Friday, it announced some positive results and it broke out with a Bible gap up, mobile breakout from the squeeze and a kahuna. A lot of these stocks that I tell you that I'm looking at, when they pull back to the 50, they don't do anything for a couple of days. And then just as you're getting bored, they blow out. Here's a stock that's up on news and hype. What's its market cap now? $600 million market cap. They're in the vaccine space, and these, if I remember correctly, they were chosen by the U.S. government to be the only oral vaccine being looked at now in COVID. Somebody asked on Twitter or somewhere, can you have an oral vaccine? And the reality is absolutely yes. Some of the polio vaccines used ex-US, outside the US, are actually oral. So that's the stocks I'm looking at. I want to just go back into my presentation real quick. Spend a couple minutes talking about the webinar. I'm the only one that does all this and sells you nothing. I'm either a nice guy, A, B, like to hear myself talk, B, C, a sucker, because I've done this every week for 15 years. And my wife would say D, all the above. But I enjoy doing it, and I do like to hear myself talk. Just ask my kids. So let me drill down here. Friday, July 3rd. Here is the URL. It will be in the invite that comes out to people. What I'm going to do is I'm going to look at my tools, how I use the tools I have. I know because of me, a number of you have bought Dr. K's Seasonality and Lagar RSI. I love them, and I'm going to show you how I use them. I know because of me, some of you have purchased some of the Q tools from Sagar. I know some of you this week bought the Roy Kelly top and bottom cycle indicator. So I had somebody ask, when am I going to give you my workspaces? Well, I think I can share a lot of this stuff with you, and we'll talk about it on Friday. So Friday's a free forum. I will talk about the market, review what happened this past week, and do that instead of a video because I'm going to be on my boat the rest of the weekend. And we'll go from there. So just to review, we're in a dangerous section of the market. In fact, let's go look at, this is what, 15 minutes? Daily. Here are the spiders, here are the Qs, here are the diamonds, and here are the Russell. All of them are in significant uptrends. All of them have recently fired the Roy Kelly cycle top. Two of them ran right into something that's been there for a while. Okay. Trendline resistance. All of them have the pluses and the dots. I look at this in best case, we are still in a bull run. We've got a little wedge here. We've clearly got a little wedge there. We've got a wedge here. Maybe we're just in a pullback within a wedge and we're going to resolve to the upside. I think that's possible, especially with the seasonality. But I also look at this and I notice that the last bar of each of these was breaking down, breaking down, breaking down, and breaking down. We ended up weak. News will always impact on this market. On that note, I'm going to say goodnight. Have a great weekend, short work week, and I hope to see you on Friday. Goodbye, everybody.